In this episode, this month we're talking all about mergers and acquisitions and selling and buying businesses, we're gonna break down how to actually value your business. We're talking about cash flow. We're talking about profit. We're talking about seller's discretionary earnings, SDE, or even EBITDA. These are the real metrics that buyers use to put a number on your company. So if you ever plan to sell or you just want to build a business that prints money, this is non-negotiable. So I want you to stick around or you're going to stay broke and confused. And let's get right into it right now. In 3, in 2, in 1. Welcome everybody to the show. We're here, beautiful Transcend Studio in Tampa, Florida. This is Beyond the Claim. My name is Vince Perri. I'm your entrepreneur coach, public adjuster coach, business coach, maybe even life coach. I don't know. I've been a coach for over 15 years, and I feel that it's my duty after being a business owner now for over 16 years, owning several businesses, scaling businesses, crashing businesses as well. I feel like I've got enough. And then also the honestly constant reading and education that I do. I owe it to you guys to try to educate you as much as possible with everything that I learned and with everything that I continue to learn. But before we get into the show, I want you to smash the like button. I want you to smash the subscribe button. And I want you to don't break your computer. Smash the bell as well. You're going to want to be on this because we've got so many cool things that are coming out in the show. It's like ridiculous. And here's a new thing that we're offering. I want you to click in the description and I want you to download the free guide that we have for this show. It's actually a cheat sheet. It's called a business valuation cheat sheet. So if you're at all unsure as to how much your business is actually worth, we've got the freaking blueprint. It's a cheat sheet. Just click on it below. You can put in the numbers of your business and you can actually figure out how much your business is worth. How about that? So hit the description below and make sure you do it because you don't want to get lowballed when it's actually time to cash out. All right, let's get right into it, guys. Here we go. So let's get right into it, guys. The big idea here of this episode, revenue is vanity, profit is sanity, but cash flow is king. Revenue is vanity, profit is sanity, but cash flow is king. Your company's value isn't based on what you make. It's based on what you keep. And more importantly, what a buyer can expect to keep once you're actually gone. So I had a buddy, right? He comes to me and he says, Vince, I'm ready to sell my company. I said, okay, how much are you making? And he says, we're doing $4 million a year. And I said, that's cool. All right, can I look at the books? So I look at the books, we break it down, and the dude is barely clearing $200,000 in actual profit. The owner's compensation is a mess. The expenses were all over the place, and there was zero add backs. So I told him, dude, you don't have a $4 million business, by the way. You've got a $600,000 business, if you're lucky. He was crushed. But that moment sort of saved him. So what we ended up doing, the team, we cleaned up the books, we boosted his SDE, which we're going to explain in a little bit. And 18 months later, he actually sold his business for double what the first initial buyer had offered him. And that's because now he had actual real numbers. So what are the steps and what are the things you need to go? Let's start with step number 1. So step number 1, know the difference. Know the difference between revenue, profit, and cash flow. That's right. There's a difference between profit and cash flow. So let's break this down because too many people get this twisted. So revenue. Revenue is the total amount of money that your business brings in. That's it. That's the number that you brag about at all these conferences. But let me tell you something about revenue. If your operating expenses are through the roof and your COGS are through the roof, then you're not a viable company, whether you're making $10 million or $100 million. It's the money before the expenses, before the costs, and really before reality actually hits. So you sold $5 million, that's awesome, that's great. But if you spent $4.9 million to make that $5 million, well, guess what? You're freaking broke. Profit now is a little bit different. This is what's left after you pay all of your expenses. I know I'm talking obvious here, but we need to explain this. Your cost of goods sold, your payroll, your rent, your software, your Uncle Sam. This is what your P&L statement spits out at the bottom. This is very important because this is where you want to be in the green. But even that number, it isn't clean when you're actually valuing a business because most small business owners run all kinds of personal perks and write-offs through the business. You know you are, your gas in your car, random trips, or a random sentence about your business in a dinner with your wife and you count that as business. That's not actual cash flow. Now, cash flow, this is what actually hits your bank account and actually stays there. It's the true heartbeat of your business. It's not what QuickBooks tells you. It's not what your CPA fluffs up. It's what did you actually make this month? What can you actually pay yourself with? What's left to reinvest? Buyers only care about cash flow because that's what they're buying. It's a money machine, not a circus act with big revenue and no profit. How much money are you as the owner taking home? Now that could be anything. It could be the profit in the business. It could be the profit that you separate for yourself. It could also be the distribution to owner. It could be your actual salary. It could also be, again, all those random dinners and all those things. All those things add up. That's what the actual cash flow is, not just the profit bottom line. And what I'm going to try to teach you here in this few minutes that we have is how we could distinguish exactly what your company is worth based on all of that cash flow added up. So this leads me to one of the most important numbers that you want to be able to figure out in your business. It's called SDE, Seller's Discretionary Earnings. Okay? I know, sounds complicated. Took me a while to learn it, but I got it. SDE is your real take home as the owner. So it's your profit plus any personal benefits or one-time costs that wouldn't exist for the next owner. So here's the formula. SDE equals net profit plus owner's salary plus perks plus one-time expenses plus add backs. So let's break this down. If you pay yourself $150,000, run your car through the business, take the family to business conferences in Hawaii, and spend $30,000 on a lawsuit that won't ever happen again, all that gets added back in. Why? Because a buyer wants to know what they'll earn if they take your spot. So SDE tells the truth of your actual owner style lifestyle. Like, what is it that he's going to actually be looking like? What's his life going to be looking like if he actually takes this business? But you've got to prove every add back. There's no funny business. You have to show receipts, you have to clean it up, and you have to document everything. When you are ready to sell your business, everything comes out in the open, and you have to make sure that you could account for it all, and it is what determines the price of your business. So if you're constantly going on vacation, or if you've got a bunch of miscellaneous stuff that really is shopping on Amazon for stuff for the house, all that stuff will affect the actual value of your company because, quite frankly, that's not actually for the company. So the next thing I'm going to explain, another complicated term that you guys are more than welcome to DM me about, is EBITDA. Now, EBITDA, this is more for the larger type of businesses. These are just multiple millions of dollars. The smaller businesses use SDE. The larger businesses use the EBITDA. It's also known as the investor metric. It stands for earnings before interest, taxes, depreciation, and amortization. So this strips away anything that's not core to the business operations. It's what private equity firms, serious buyers, and financial institutions really care about. Why do they love EBITDA so much? Well, because it tells them how profitable the business is before the actual games and shenanigans really start. Interest, that's about how you finance the business. Taxes, depends on where you live. Depreciation and amortization, accounting moves, paper expenses. EBITDA is the closest thing to your business's engine. The stronger your EBITDA, the more valuable your company is. I want to tell you what the kicker is here, is the bigger your EBITDA, the higher your multiple. So besides that, I want to also tell you that I am not an accountant and I'm not anything like that. This is just from what I've learned over the last couple of years here in business brokerage, and I'm really trying to define these things. I know it's complicated. Like I said, you could come and DM me and ask me if you want more information, or you could ask an accountant as well. Step 4, all right? We've gone through 3 steps. We've explained a lot here. Step 4 is how buyers value your business. Now, buyers don't value your business emotionally. They don't care how hard you worked, and they don't care about risk and return. There's a formula, and they use this formula. It's very simple. Value equals SDE, or value equals EBITDA times a multiple. Now, we have to include this multiple, all right? So the multiple is based on just the industry. So for example, software industry might get 5x the multiple, or the plumbing industry gets maybe 2.5 times the multiple. Systems, can it run without you? Recurring revenue, customer concentration, clean books, scalability. You think, of course, and the thing that we run into with every seller in a business is they always, 100% of the time, think it's worth more than what it actually is. So you probably think your business is worth 10 times because you love it and you put your blood, sweat, and tears to it. I get it. I'm a business owner, but nobody cares. If it's risky, sloppy, and dependent completely on you, which we've talked about, systems and operations, and removing you from the business, you're getting 2 times the value max. If your business is risky, sloppy, and dependent on you, you're going to get max 2x on your actual multiple, and maybe even less. But if you build a machine clean, scalable, and throwing off consistent profit, now we're talking real money. Last step, okay? Last thing. I know this is a lot of information. It feels like a lot of information as I'm telling it to you, but that's okay. Just leave a comment below. Let's figure out how you could actually maximize your valuation. So you want top dollar, right? You got to do the work. Number one, clean your freaking books. You have to clean the books. I've talked about this before. Stop the shoebox accounting. Stop the Excel accounting too. Like get QuickBooks. Get legit financials, please. The next thing is you have to remove all personal expenses. No more sneaky vacations and toys through the company and Amazon purchases and all that stuff. You have to keep it clean. Get all that stuff out. Next thing is you have to document the systems. I talk about it all the time. I feel like I'm sick of it already. It's SOPs, it's org charts, repeatable processes. So the buyer doesn't feel like you're the only thing holding it together. It's got to be a machine. It's got to be a product. The next thing is recurring revenue. That's a big one. If you're able to build some kind of subscription model into your business and contracts and anything that brings predictable income, that's going to take it a long way because they know there's going to be consistent cash flow coming in. And then the last thing is grow profitability. Scale. Yes, but don't bleed cash doing it. It's got to be controlled, it's got to be efficient, and growth is sexy to buyers. So if you do those 5 things and your business becomes an asset, it's not just a job with a logo, it becomes valuable and you'll be able to sell that sucker for a lot. And you'll be able to go ahead and take that trip to Hawaii just off of the winnings that you got from your actual business. So that was a lot. Let's bring it all together. First one. Revenue, it's a flex, right? It's bullshit, okay? It's just revenue. It means nothing without profit. Profit shows health, but it still needs clarity. What is king, of course, is cash flow. What's left after the smoke clears. What you want to have is the cash. It's all about the cash. SDE, seller's discretionary earnings, shows what an owner can truly make. This is what this number, when you figure it out, we gave you the equation, is how much basically the owner knows he's going to be making as soon as he steps into the company. That by far is the most important metric that you can give a potential buyer. EBITDA shows how the business performs at its core. Buyers pay a multiple of these numbers based on risk and return. What is your job? Just make sure that your business is so clean, cash generating, and systemized that it becomes undeniable. This is how you stop hoping for a payday and start actually commanding one. So what I would like for you to do, we just completed the whole video here. I want you to do homework. Tonight is not tomorrow. It's not next week. I want you to pull your last 12 months of your profit and loss. And based on the calculation that I gave you, I want you to calculate your SDE. Then I want you to calculate your EBITDA. And if you have a problem doing it, just use ChatGPT to do it. Take ChatGPT, upload your P&Ls for the last 12 months, and you'll just ask it to give you the SDE. It will likely do it if your books are clean. I want you to identify every messy add back and every personal expense. And if you can't do this alone, just get some help because you don't build wealth by running blind. I would recommend, if you're at all interested in doing this, contact a business broker. And guess what? Guess who's a business broker? I am a business broker. It's one of the things that I do that I actually help people sell their business. I put together the entire model for them. I put together the entire package so that it could be actually very intriguing and it could be sellable for somebody who's actually interested in acquiring a business and start that part of their lives. So if you're interested at all, make sure you download the cheat sheet below that we've got and I'll have your information and we could contact each other. If not, just DM me on Instagram and I'll be happy to help you. So remember, don't just build a business, build an exit, and make sure that you download the valuation cheat sheet. We've got it in the description. You're going to want it. Just that cheat sheet alone will allow you to give you the valuation that you need to find out if it's actually worth selling and how much work you have to do to get that valuation up. And also subscribe, hit the bell. There's so much good information on here. I'm telling you, you're not going to want to miss this show. Every single Wednesday, we've got a new show. Every Monday, honestly, I'm beginning to think that the Monday show is actually, the podcast, the interview shows are actually more popular. You're not going to want to miss that either. So just make sure that you follow on social media and everything else because you're not going to want to miss it. And then remember, top line ego will keep you broke, but clean, scalable cash flow, that's going to make you rich. That's what we got, guys. Thank you for watching. We'll see you next week. Peace out.